Good day, traders. How is the day? I've come again to teach you how to trade a proprietary account. You know, we have a lot of them right now in the industry. The popular one is my forest fund. Another one is what do we call them? My forest fund. You have this popular one FTMO. All right, I don't want to mention anyone outside FTMO and my forest fund. Okay, all these proprietary firm, they have their own trading objective. They have trading objective that you must maintain. And what is the trading objective that is peculiar to all of them? Number one, they will tell you that you must ensure that in a day of trade, you do not lose more than 5% of the capital. All right. This is a peculiar trading objective. They will also tell you, number two, that overall, overall loss, your total drawdown, okay? Maybe you lose today, you lose tomorrow, you lose, you gain, you do so, and you are going down in the account, overall loss must not be more than 10%. If it's more than, overall loss is more than 10% within the stipulated day that is given to you to pass. If it's more than 10%, you have failed. If in a day of trade, you lose more than up to 5%, you have also failed the evaluation process. Do you understand now? So there may be some other objectives, but these are the two, popular trading objectives that you must ensure that you maintain while trading for them. Okay, so for instance, if you are giving a $50,000 account, if you paid for $50,000 account, okay, you pay for this, then if they say daily, you must not lose more than 5% of the account. It means that you are not allowed to lose more than up to 2,500, not more than, up to. Once it's up to 2,500 loss in a day, you have invalidated the trading objective and you have failed. Okay, and if you have passed before and you are given the account and you hit 2,500 loss in a day, then the account is taken away from you. And then secondly, what this implies, what this 50K account implies is that if you are not permitted to lose 10% of the account, it means that you are not permitted to lose 5,000 of the account overall. That is, maybe you lose 500 today, okay, win 500 tomorrow, next tomorrow you lose 1,500. Of course, you are still within, you have not lost up to 2,500, so you are still okay. Next tomorrow you lose another 1,500. You see, that's 3,000. You have lost 3,000 now. Okay, you have only $2,000 to go. Only because overall you must not lose 5,000. So even at this stage now, guys, at this stage now, any day you lose 2,005, you have invalidated 10%. 10% has taken you out first because you are left with 2,000 to go. So if today you lose 2,100, for instance, although daily limit of 2,005, you have lost 2,001, you are still under the daily limit, but you are invalidated by virtue of 5,000 total loss that you must not incur. Do you understand now? Good. So this is the background analysis of the trading objective of most of the proprietary firm. All right. So the next thing I want to tell you is that if you are given this 50K, okay, if you pay for 50K to trade And the overall loss in the account is only 5K, guys. In my own assessment, I do not want to see the money given to me as 50K. I want to see it as 5K. Simple. So 5K, that is what is given to you. This is not the way traders are seeing this stuff. When they pay for 50K, they are saying that the money that is being traded in the account is 50,000. Some of them even brag about it, that they are trading 50,000 accounts. Whereas this $50,000 account you are trading, in as much as you are not supposed to incur a loss up to 5,000, as far as I'm concerned, you are only trading a 5,000 US dollar account. Do we accept that? For instance, if it is 100K that you paid for, if you are not supposed to lose up to 10% of this account, for above which you will have deemed to have failed the test, it then means that what you are trading is only 10K. All right. So I want us to now work based on 50K. All right. What I want to show you here is how to trade this prop firm account. How do you trade it when it is given to you? How do you trade it? So for instance, we want to make this example, want to do that example of that of 50K. All right. I've told you in the background analysis that when you are given a 50K account and your overall loss must not be more than 5K, being 10% of 50K, it then means that you are trading how much? You are trading a 5K account. Okay, you are trading a $5K account. That's how I see it. And then if you are trading a 5,000 US dollar account, the advantage you have over if you are just trading just a deposit of 5,000, the advantage you have here is that you have room to play. You have room to play. And this advantage of room that you have to play is what many of the traders misuse. Okay, they misuse this advantage and they trade, they trade extraordinarily, and before you know it, they are either being hit by daily loss limit, or they are being hit by total loss limit. So what do I do, guys? What I do is I look at this 50K. This 50K given to me, I'm looking at it as 5K. And once I get this 5K, guys, what I do is to divide this 5K into 20, 5,000. I divide it into 20, guys, because I know that if I'm taking my trade at random, okay, by the time I take 20 trades, I'm supposed to make 10% of the account. My strategy will give me 10% of the account, no matter how bad I have traded within the specified period. Over a period of 1 month, if I take 20 trades, guys, I should have 10% of the account. So it's very rare for me to trade a prop firm account that I don't make 10% in 1 month. It's very rare. So what I do, if you now divide 5,000 divided by 20 trades, what you get is 0 cancel 0, 2 here, 1, 2 in 500, 250. Can you see? So this 250 now, I now take it as what I'm willing to risk per trade. What I'm willing to risk per trade. So I want to do 20 trades to pass this test. And then each of the trade, I'm going to be risking $250. Okay. And this $250, guy, I want to make sure I take a trade that I can get minimum of 1:3 risk to reward. Okay. So if I'm taking a trade minimum of 1:3 risk to reward, it means that I'm going to be taking some trade where I will risk $250. Okay, I'm going to risk $250, and if I get 1:3, 1 ratio 3. It means that I'm risking $250 and I'm getting 250 times 3. I'm risking 250 and I'm getting $750. $750. That's what I will get. Even if after getting this $750, I go for another trade, and when I take that trade, the trade take me out as a loss. As a loss, it means that in the second trade, I have reached $250 and I have lost $250. Can you see? I'm still positive, so that will not bother me. Maybe I even go for another trade, guys, and I risk another $250. Okay, I risk another $250, and then I lose $250 again. Does it mean my strategy is not good? No, doesn't matter. It doesn't mean my strategy is not good. Market condition might make me to lose. Impatient might make me to lose. Do you understand? Maybe I now decide to go for another one, risking how much, guys? $250. Okay, and this time around, I hit 1 to 6. I hit 1 to 6. And 1 to 6 means 250 times 6. That is 1,500, guys. $1,500. Can you see? I have not allowed the two losses I have here to affect my strategy. My strategy still remain the same, guys. So if you look at 750 here, after that I have lost 250, 250, 500. Take 500 from 750. You see a balance of 250. Add 250 to 1,500, guys. Now you are up by what? 1,750. Can you see, after taking how many trades? If your strategy is good and you know what you are doing, that's the first thing. Your strategy must be correct. Okay, after taking 1, 2, 3, 4, after taking 4 trades, you have lost 2. You have won 2, and you are up by 1,750 US dollar. That is why, guys, we do not allow our losses to bring us down. Okay, but because we are not looking at 3 trades or 4 trades, we are looking for 20 trades to come. So by the time we do plus and minus, you will see that we will be up. Okay, maybe you decide to take another trade, risking how much, guys? $250 US, $250, and this time around you got a break even, 0, because you were in profit, and after you are in profit, you now move your stop loss to entry, and the market came back and hit you out. You gain nothing. And because market is very erratic, you go in another day, you go in for another trade, you reach 250, guys. After you are up by almost 1:1, you are up by $250. Eventually the market came down against you and you got a break even. Can you see? You see how trading works? You go for another one, guys, risking $250 US, guys. Okay, this time around, the market condition is still worse, but you forgot to break even, which you are not supposed to. And then the market took you out at a loss. Can you see? We're only looking for 5,000, guys. You see how it's like we are suffering to get there. That is the real market situation. That's how it happens. You go for another one, guys. This time around, you hit it very hard. You reach $250, okay, and you got a profit of 1:10. It's possible in the market. We get it like this. 1:10, guys, is what? $250 US. That's 10 times 250. That is what? 2,500 US dollar. Can you see this 2,500 US dollar now minus, if it plus minus this loss of 250, that is 2,225 plus 1,750. Can you see? You're almost there. Do you understand? So all these trades is going to happen in the course of the month. You might see yourself taking up to 30 trades, up to 25 trades before you eventually get 10% of your account, 10% of your account to pass. But this is how you do it in such a way that even if you take all these 4 trades in a day, you now make up your mind that there is no day you want to lose more than 1,000 US dollar. They are telling you that you are permitted to lose 2,005. But if you follow their instruction, it means that you are telling yourself that you are trading a 50K account. If you want to work based on $2,500 a day, it means you are telling yourself that you are working based on what? On 50K account. But because you have told yourself you are working based on 5K account, and their own 2005 of 50K is just 5%. So you now have to calculate your own 5% of 5K. Okay? 5,000. What is the 5% of $5,000, guys? 5% is 250. 250. So, and this is what you are risking for one day, 250. So you can decide to say, okay, 10%, 10%, 10% of what? Of 5K, which is what? 500. And if per trade you are risking 250, it means that you have a total trade that can trade in a day is what? Is only 500. You have 500 exposure in a day. If you lose 2 trades of 250 each in a day, you have lost 500. So this $500 you have lost is your total daily allowable loss limit. So don't go into any trade again that day. Go and study, freshen yourself the next day and come back again. So if you do like this, one thing that is guaranteed for you is that you are not going to have, you are not going to ever be caught in daily loss limit. Daily loss limit will never affect you if you trade this way. That is number one. Because now that I said per trade, you should not risk more than 250. Some people will now go and take 5 trades in a row. Go and take 5 trades in a row. The question is that, the problem is even that they will take these 5 trades in a row at the same time. Okay, at the same time, it means that these 5 trades at the same time you are taking, if you are risking 250 per trade, it means that you are risking $2,500. $2,500 at a go. Then the question is this: what happens if all these trades end up as a loss? Because some people again will even go and take correlated pairs. They will take AUD JPY, AUD USD, all those things, correlated pairs. That's what they will take, where if one result to loss, the other one will also result to loss. So if you trade like this, guys, it's going to be disastrous. You have to look at the pairs you are trading. What is your daily allowable loss limit? If it is only 500, guys, you have 2 trades to take, each one of $250 risk per trade. That's what you have to take per day. Okay, two trades. If you lose the 2, fine, nothing for you that day. But the question is that, what if the first one you take in a day, guys? What if the first trade in a day you take, you now get 1:3? In that case, you have reached $250 per that trade, and you have made what? $750. So this $750, guys, is going to add to your balance. But you are going to do something very quickly. And that thing you are going to do is that if your daily allowable loss limit has been kept at 500, meaning that it is only 500 you have accepted to lose, that if you lose this 500, you are not going to trade again that day. What you are going to do for me quickly is that, as a result of your first trade, guys, that you made 1:3, which is $750, you are just going to quickly add $750 to what? To 500 that you are only permitted to lose for that day. If you add it to it, guys, you are going to get 1,250. So this 1,250, guys, is your allowable, is your daily loss limit, allowable daily loss limit. Okay, this is the maximum threshold that you have now. It's no longer 500, it's this. But in case of prop firm, in case of trading for a prop firm, this $1,250 now does not make you to increase the loss, the risk per trade from 250. You don't need to increase it. Okay, the next trade you are going to enter, it just means that you have more trade. When you have up to like five more trade that you can take in such a way that you will invalidate your daily allowable loss limit. You have 5 trade more, 250 each. Because if you multiply this, if you divide this 1,250 by 5, you will still get 5 here 1, 5 in 12, 5 in 12, 2. All right, remain 2. In 25, 5. That's 250. So you have 250 to risk, and you have 5 trades to go. 5 times 250, 1,250. Do you understand? So what you now do is that each trade you are going to enter next, your risk is still going to be 250 per trade. But if you are trading an account that is not a proprietary account, all right, you can decide to say, okay, now I'm supposed to reach, I'm supposed to have 500 loss limit. Now I have 1,250 as a result of my profit of 750. So you can decide to say, okay, if that's the case, I can increase my risk from 250. I can make it like 350. Okay, 350. Okay, so, and you can decide to say, okay, I have maybe 2 trades to take today. So if this one result to break even one, the other one maybe 1:2, that will be 1:2 will be what? You are risking 350, you are getting 350 times 2, 700. So by the time you add this 700 to 1,250, it has made almost $2,000 for you. All right. And if this one, first one, this 350 result to a loss, you are at a disadvantage. You can decide to revert back to your 250. Am I too quick? Am I too fast? Just try to understand me as I'm explaining this to you. It took me time to master this risk management strategy that I adopted to trade prop firm. All right. So now the last thing that I want to discuss with you is that now I have told you how to divide, how to assume that you are not trading 50K, that you are trading 5K, being the 10% total loss that is permitted from the account. So haven't had that. I've also told you that you have to divide that 5,000 into 20. So it gave us 250. That is what you will be risking per trade. I've also told you that you must determine within your mind that you are not, you have not permitted yourself to risk to lose more than $500 in a trade, being 2 trades. Because if you follow the daily loss limit of 2005 that the company gave to you, it means that you are still working within yourself on the basis of 50,000. You are still working on the basis of 50,000. And then you have what? You have reduced it to 5,000 by your own assumption. Do you understand now? So if that is the case, how do you now consider the lot size you'll be taking? If you have to work based on 250, supposing I give you a trade, and that trade has a stop loss, a stop loss of what? 50 pips. Okay, 50 pips. Okay, and then the total amount you agree to lose if you should lose this trade is $250. Okay, so this $250, guys, what you are going to do is that how do you now get the lot size you are going to use for this trade? How are you going to get the lot size you are going to use? What you are going to just do is simple. Just come and say $250. Okay, $250 divide by 50. Divide by 50. 0 cancel 0. 5 here 1. 5 here 5. Does it mean you are going to use 5 lots? No. All right. So what lot size are you going to use this way? Remember, when we are dealing with PIP, go and do research on how to do the calculation. What you have to do is to divide it by 10. Okay, what you do is divide it by what? 10. Divide it by 10. Divide this by 10. That's all. 5 divided by 10. Whatever you get, amount you are willing to lose, divide by the stop loss in pips. Okay, then whatever you get, divide by 10. This one is going to be 0.5. This is your loss size, guys. 0.5. Let me do it again. Somebody say, Nat, I'm not getting what you are saying. I will now explain it to you. How much are we risking per trade? That is 250. You must know this. Now, we are not talking in terms of percentage that we are willing to risk. We are talking of the amount. This is the amount. What is the stop loss of the trade you want to take? 50 pips. Sorry, it's not dollar. 50 pips. 50 pips is the stop loss. Okay? So what you have to do for me is that you are going to say total amount you are willing to risk, which is 250. Divide it by the number of pips. Times what? 1/10. That's the formula. Times 1/10. This is what you are going to do about this. So if you now come and say this, cancel this. This 5 here, 1. 5 in 25, 5. So you are left with what? 5 times 1, 5. Divide by 10. Okay? 5 here, 1. 5 here, 2. 1/2, guys, is what? Is what? Is equal to 0.5. So you are going to use 0.5 lot for this trade. And I'm telling you, if you lose this trade with 0.5 lot, you have lost $250 US. Do you understand? And at the same time, if you make a profit of 100 pips on this trade, guys, you have done what? You have made a profit of what? Of $500 US, because 50 pips is $250. Okay, and then 100 pips will be what? 100 pips will be what? $500 US. So this template I give to you, also you can also use it to calculate, you know, the how you are going to arrive at your lot size in any account you are trading. Assuming you are trading, most of you are trading 200, 500, 1,000 US dollar account. Let's use $200 account, okay? And you are willing to risk 200 divided by let's say you are willing to part with $20 for every trade you are taking. You are willing to part with $20. All you just to do, guys, is simple. Just say $20 US divide by how many pips that make up the stop loss of this trade you are taking. Let's say it's 70 pips. Okay, so you have to say $20 divided by 70 pips. Okay, times what? Times 1/10. This is going to give you the lot size. This is going to give you the lot size. The lot size. So let's divide it now. 0 cancel 0. So what you have is 2 times 1, which is 2, divided by 70, guys. Guys, 2 divided by 70 is what? Let's divide it. 2 divided by 70. And with you guys, 2 divided by 70. 0.02, guys. You are going to use 0.02 lot size. 0.02 or 0.028 lot size. This is the lot size you are going to use for this trade, guys, in such a way that if you lose this trade, you are not going to lose more than $20 US, which is 10% of your account, which is too high. But if your account size is very small, you cannot afford to be risking 1%. Because if you risk 1%, only God knows when you are going to make reasonable money that can buy you that can do your haircut in the salon, or if you are a lady, only God knows when you are going to make money that can do pedicure for you. So you cannot afford to be risking 1% if you are trading a $200 account. I can't deceive you. You have to close your eye and maybe decide on how much you are willing to lose. If what you are willing to lose is just $20, that is what you should have in mind. And anytime you see a setup that you want to take, if the stop loss in pip of that setup is 50 pips, all you are just going to do, guys, is to say $20 you are willing to give away, divide by 50 pips, all right, 50 pips here, times 1/10. That is the formula, guys. So when you say 0 will cancel 0, then you have 2 times 1 is 2, divide by 5 times 10 is what? 50. Okay, so 2 here 1, 2 here 25. So what you have here, guys, is 1/25. And now this 1/25, how do we do it? 1 divided by 25. Okay, let's apply rule of mathematics. 0 here, point at 10 is still 0, 0 at 10, that's 100, that's 4. Okay, somebody say, oh, no, how do you do it? This is ordinary mathematics, guys. We had 1/25. Okay, 1/25. So you can't share 1 into 25 people just like that now. So what you do is that it won't go, so it is 0. So for the fact that you are putting 0, you have to add 10 here. It cannot still go. You have to put another 0. So you have to add 1 here again. So 25 in 100 is 4. I think this will be the answer. So your lot size is 0.04. This is what you are going to punch on your MT4, 0.04. And then the size, the stop loss level, you put it there on the stop loss size. The TP level, put it there on the TP side. Put the loss size here at the middle, stop loss here by the left-hand side on your MT4 on your phone, TP on the right-hand side, loss size at the center, at the middle. So this is how you go about it, guys. So I have just explained how you will trade for my Forex fund, or how you trade for FTMO. And then by extension, I've also explained how to calculate lot size in order to stay within a stipulated risk parameter for our newbies, our beginners who do not know how to calculate lot size. Okay, this video has just solved your problem, guys. You know, I've always promised you, as long as you stick with me on this channel, I'm going to be solving your problems one after the other. My goal, my objective is to make sure that many are independent traders. Many know what they are doing. Many know the right thing. There's no point you running helter-skelter, looking for solution everywhere. The solution is here. You don't need to pay anything. Here is free of charge. I only charge people when you want to, subscribe to mentorship. I have a mentorship program, is just yearly $300. If you want to do that, it means you are telling me that you are not satisfied with the level I'm giving you in the free training. You want more. You want me to dedicate more of my time to only you. For that, you must pay. But if you say you are okay with the free training I'm giving you, which is enough for you to make it, guys, it's enough. If you pay attention to that, you don't need to pay me for mentorship. But pay me for mentorship, you are telling me that you want to be like me. You want to be like me in the shortest period of time. In 1 year, 6 months, you want to be trading like me. You want to understand financial markets the way I'm breaking it down. So when you want to do that, you need to come for mentorship. But when you just want to be making your money gradually, little by little, you don't need my mentorship. Just keep learning, keep learning, keep learning. All right. At the same time, guys, I have a signal channel for people who are busy and they don't really have time to sit and learn Forex the right way, and they feel that they want to benefit from what is happening in the financial market, I am available for you. They have made special requests for signal channel, and I've commenced, the signal channel for the sake of these people. And this strategy I'm sharing for you here, you can register for my forest fund and actually use my signal to pass them. I'm telling you, if you are committed and you stick with the rule I lay out for my signal channel, it is okay for you to pass my forest fund. It's okay if you follow it for you to pass your FTMO. You will pass it, guys. I pass it effortlessly. Okay, I have a real FTMO account. I pass it effortlessly. So you should be able to also use my rules on this and also pass it. There's nothing there. Okay, and then in your own private trading too, you can use this same strategy, guys, to to do whatever you are doing, and you will make it. So because the biggest problem of a retail trader is lack of commitment to stick with the rule, lack of commitment to stay within a refined rule that make up a trading system. When you are not ready to focus your attention on risk, rather you are focusing attention on profit, you are never going to make it in forex trading. Let me repeat myself for somebody to hear me. When you are focusing your attention on the number of dollar or the amount of dollar you are going to make in a trade, and you are refusing to focus your attention on the risk and what you are potentially going to lose, guys, you will never make it in trading financial market. This is a market where risk is more important to us. Stop loss is more important to us than TP. I have re-emphasized this assertion in a number of times in such a way that when I trade with my people in the community, I don't put TP because it is not relevant to me. What is relevant and important to me, as far as I'm concerned, is my stop loss. How many pips am I maintaining? How much am I willing to risk in dollar term? Or how many percentage am I willing to risk? Once I know this, I know the right loss size to use in such a way that if I lose this trade, I'm not going to lose extraordinarily. And when I don't lose extraordinarily, and I'm losing within a confined amount based on the parameter set in the trading system, I'm not going to regret it, because I know what determines my progress in this business is not 1, 2, 3, or 5 trades. I can lose 5 trades in a row. That's not my problem. But the one I win, do I win it very well? Yes. So if the one I win it very well, I'm okay. Only one win will wipe away 5 losses that you have incurred. If you have confined yourself within the loss parameter that you have set in your trading system. If you are not losing more than 250, 250, 250, and you now win one, you now win 1:10, that is 2,500. If you lost 3 trades in a row, that is 750. What is 750 compared to 2,500, guys? So this is the basic truth that is lacking in the 95% of losers in this market. And I'm telling you the secret right now, guys. Once you get it now, once you get it right now, you have gotten it right forever. If you fail to get it, as simple as I have described this to you, and I'm not sure you can get it again. So watch this video again and again and again and again and again, and try to get it perfectly. And as long as you get it perfectly, you will celebrate me in years to come that I put it right for you. Because when I started 8 years ago, nobody explained to me like this. I did not get the explanation this way. I struggle 2 to 3 years before I had to get it right. And all this, did anybody teach me? No, I formulated this by myself. And not until I got this before I began to pass FTMO, my forex fund. Everybody knew I was with Funding Talent all through last year. These were the strategy I was using to trade the account. And at times, some month I will return 40%. I'll trade 100,000 account, I will return $40,000 in a month because I was sticking with the rule. Do you think I was not losing? I was losing. Even at times, I will have a losing streak. I will have 4 or 5 trade losses in a row. But that did not stop me because any trade I win, I was going to win well. And once I win well, it's going to what? Cancel out all the previous losses. So this is how to trade, guys. And these are the essential of trade and risk management strategy. Remember, when you are trading, as long as you are in profit and you have broken structure, make sure you move your stop loss to entry. You are trading this up, correction up. You have entered here. As soon as you break this top here, boom, you have a structure. So what you have to do, your stop loss was here before, cancel this stop loss, delete it from where you put stop loss, just delete it. Go and check the price on this entry that you enter. What is the price, guys? 3.2853. 3.2853. Delete this stop loss that was here. You put your stop loss at 2.8638. Delete this one, guys. Write this one in place of stop loss, 1.2529. That's it. Put it. That's your entry. That's your stop loss. So if this market now, instead of you expecting 1, 2, 3 correction and more upside, if this market now make 1, 2, 3 corrective structure and it's now coming this way, are you losing anything? Once you get to this level you enter, it will take you out and then you are not losing this trade. This is what we mean by break even. Break even, a situation where you neither lose nor gain and your account balance remain preserved, remain protected. This is essential. This is risk management, trade management 101. Anybody that does not know this is not qualified to trade financial markets. Is that okay? So I have given you this strategy today. Learn it. Let me know your feedback. Many people don't know who is talking. My name is Nathaniel Tunde. I have about 50 videos, full of power, full of energy. I've used the whole of my time, night, day, every time to make sure I package this for everybody I'm inviting to come and learn Forex free of charge. Please spread the good news. Spread the good news. Anything you need from foundation to intermediate to advanced, I will make sure they are available. And I keep telling you guys, there are many things to learn in Forex trading or trading financial market in general, but you do not need all of them. That was the mistake we made when we started. We were learning everything. Guys, you do not need everything. You just need few. The few you need to succeed is what I have put in this channel for you to learn. And as long as you started from foundation, move to the playlist under education. Let me show you here real quick, guys. Let me just show you. Let me show you. It's the channel. Okay. This is the channel. This is what you do. Just come to playlist, guys. Start from foundation. This is foundation courses, guys. See it. All these courses are foundation courses, guys. You start from here. When you are done with these foundation courses, just move to education. This is education courses. You have about 25 videos under education courses. Make sure you study them. After that, you now go to trade setup. You show, because I structure this course in such a way that when you are done with education courses, when you are done with foundation courses, I expect you to now move to intermediate. That is under education. When you are done with this education, you now combine the knowledge you gain from foundation course and education course, combine the two together, and now apply it in the way I'm breaking down my setup. You see that 9 out of 10 trade I give are going in the right direction. This is beyond global average. This is beyond global standard, guys. If somebody is giving you 10 trades, is giving you 10 setup, guys, and is right 8 over 10 or 9 over 10, at times everything is right, you know that he knows what he's doing. That is what I have put together here for you and nothing more. So just study it. You will become an independent trader. You will not depend on anybody for signal, anybody for setup. You'll be doing it the right way that senior guys in my community are doing it today. Okay. And then if you feel you are busy and you may not have time, you know, to learn, to do this, to do that, there's no problem about that. You can participate in my signal. You can just you know, you can just message at Faith. You know, you see it in the description. Just message at Faith. All right. I'm going to put it in the description of this video. Message her. She will give you the details. You can join us in the channel, in the signal channel. Is going to be very explosive. I've made up my mind. I'm going to try my best. I'm going to try my best not to record a loss. That is my promise. I don't want to record a loss. You will see a situation where you take 10 trades, you win 10 trades. That's what I'm going to do. I want to help those ones that are working. But those that are not working and have the time, you don't need to register for my signal channel. You don't need it. Just learn what I'm teaching you. That's enough for you to make money. But if you don't have time, you don't have time and you want to make money, just contact Faith. All right, Faith will give you details and whatever you need to do. Join us in the signal channel and you surely make money. All right, guys. So remember to subscribe to this channel, press notification bell, and then share the video to your friends, share it to your colleagues, share it to everybody, share the good news. It's free of charge. All right, let's enjoy this world together. Let's learn together. See you next time, guys. Peace.